Hello and welcome to episode 338 of the Money to the Masses podcast without your resident expert, as always, Damien Fay. He's he's off this week, as we mentioned last week. He's moving house and it's all gone successfully. And those fans of Damien will be able to hear him on the podcast again very soon. In fact, he'll be back next week with midweek markets and, of course, the Sunday podcast. So this week is another team takeover and we start the podcast. We've got Lauren and we've got Harvey. And so it's great to have you guys back and actually to hold my hand through this podcast because I'm a little bit nervous. We've done it once before, but I'm sure we'll get through. And so the first piece we're going to be talking about on this week's podcast is insurance, and specifically whether you should claim on it, and if you do claim, how that might affect your renewal premiums the following year. So we're going to look at 5 different types of insurance and how claiming impacts them. And Harvey and Lauren are going to be with you on that piece. And next we'll be chatting to Bronte, who's going to be giving us 10 essential money-saving tips for students. And of course, Bronte is perfectly placed to be doing that piece, having recently graduated with a first, so good on her. And finally, we're going to be chatting to Laura, who's going to be kind of giving us a roundup of what's happening with the energy crisis at the moment. And so she's just going to be giving a roundup of what's happened, who is affected, and what people can do if they have been affected by that. And so let's start with the first piece of the pod then. We're going to be talking about insurance. Now, I know it's a bit of a dry subject for most, but we've got experts here at Money to the Masses who live for this kind of stuff. So we're going to start with Harvey. Harvey, welcome to the show. And so we've had someone in the office who has a family member who's been paying health insurance premiums for many, many years now, a fortune in health insurance premiums. And they've had a minor health niggle, if you like, and they've been worried about claiming on the insurance on the policy for fear of it impacting future renewal premiums and how much that's going to cost. So we thought we'd do this piece on all different types of insurance and really just try and clear up when should you claim, when is it worth claiming, and how does it impact that renewal process. So Harvey, can you talk us through then with health insurance, what people need to look out for? What are the things they need to check off to ascertain whether it's worth claiming?
Of course, Andy. So we had a look at health insurance. We looked at how the renewal process works, what impact claims will have on the renewal process. And what we found was quite interesting. Not all insurance companies work in the same way. So that's the first thing to point out. So for anyone who is looking to make a claim, it's understandable that they'll be worried about the impact of the claim on their renewal premium. Now, there's a couple of things that you can check just to make sure that you've weighed things up appropriately. One is look at what the overall cost of your private treatment might be. So you can get an indication. You can normally ask for a quote for initial testing, consultation fees, things like that, just so that you know roughly what your private treatment might cost. And then the next thing to do is to look at what your excess is on your policy. Now, if you're paying £250 on your excess, and the cost of the overall treatment is £500, that might mean that the insurance company is paying £250 towards that claim, you paying the other £250. So if the overall amount of money that the insurance company ends up paying towards the claim is quite low, and your excess is covering maybe an equivalent amount, you might be thinking about, well, is this really worth claiming, as it may affect my renewal premium and I may end up paying more next year for my health insurance than perhaps I would do if I just paid for my claim myself. In this particular situation, we found that different health insurance companies work in different ways. Some you can buy a no claims discount protection upfront. That will allow you to keep your renewal premium as low as it possibly can be. The caveat being that the next year around, you'd probably lose your no claims discount and would have to wait a further year of not claiming before you could reinstate that no claims discount protection. But we have found that some insurance companies, or at least one that we spoke to, where they would allow you to buy back your claim. So if you were to make a claim and that claim were to push up your renewal premium by more than what the claim amount was, essentially making you worse off because you've paid more the following year for your insurance than you had gained by claiming against the policy, they allow you to make that decision at the renewal point so you can buy back your claim. So a simple example of this would be if you had claimed £1,000 from the insurance company towards private treatment, but the following year your premiums were going to increase by more than £1,000, you may have the option to buy back your claim, essentially giving the insurance company money back to them and retaining your original premium. And it's worth noting that when you get to the renewal date of your policy, that your premium is likely to increase because of your age, because of base rate increases. Sometimes people see an increase in premium just because they've moved house, because postcodes factor into health insurance premiums. And you may also see that the renewal premium has shifted due to insurance premium taxes changing, which will be outside of your control. So there is an element of increase that's unavoidable. But when it comes to claims, you can have better options with one company than another in terms of controlling how much that impacts your renewal premium. Another thing I found quite interesting, Andy, when I was looking at this was that many insurance companies offer ways of gaining discounts to your renewal premium when you go to renew your health insurance. So completing a simple health survey, engaging with some healthy activities, taking some health checks, all of these things could gain some discounts for you at the renewal time that may offset some of the increase that you've suffered due to a claim. And when considering whether you want to claim against your health insurance policy, do consider whether the condition that you're going to claim for is likely to be an ongoing condition, i.e. something that may result in more future claims, because that type of condition is likely to cause a greater increase to your renewal premium than something that is perhaps a one-off and can be easily remedied.
Great. So that's really interesting, Harvey. I mean, one thing to sort of say on this health insurance thing, you pay your insurance premiums for a reason. You pay it because you want to have the peace of mind and the reassurance that if you need treatment, you can seek that. So I would encourage listeners to really think about that. Why did you take out the insurance in the first place? Don't put off seeing someone if you've got, especially with your health. You know, there are other things that we're going to talk about in a minute about home insurance and things where you break valuables. Your health is super important. So always consider why you took it out in the first place. As Harvey said, the tips there, speak to the insurance company, find out and double check and ensure you know what your excess is, find out how much the treatment is likely to cost, and then make your decision based on that. And of course, another thing to think about is whether that health condition that you have is actually impacting your ability to earn money, do your job, for example. So obviously there's an impact there, and that needs to be factored up when you're looking at everything else when you're weighing up whether you should claim or not. So that's health insurance done. We're going to invite Lauren on to the pod now. He's going to be covering two types of insurance. We're going to be looking at pet insurance and also travel insurance and the impact of claims. So give us some tips then, first of all, on pet insurance. What do you need to weigh up? Should you be claiming?
So if you have recently taken your pet to the vet and you have had an expensive veterinary bill, you may be considering whether you should claim. But before you do so, there are a few things that you should consider. And one of the key things you should consider is your excess on your policy. So when you will have taken out your policy, you would have agreed to paying an excess in the event of a claim. Now, this is the contribution which is compulsory towards the bill when you make a claim. Now, some policies may have the option of no excess, but this usually means an increase in your monthly premium. So one thing to consider with your excess is how much you are paying. So for example, if you had £100 excess and the bill you wanted to claim for was £300, you have to consider that you will be paying £100 towards that anyway. So is that something you want to be claiming for? Because if you do make a claim on your pet insurance, in most instances, you can expect your pet insurance premium to increase should you renew with the same provider. Now, this is because insurers assume that once you have claimed once, you are more likely to claim again, whether that is for the same condition. So the pet insurance provider, Animal Friends, does say that it reviews the premium price annually, and it does consider a range of things when factoring the cost of your premium increase, and that is varying from age, where you live, the average cost of vet treatment in the area, and also your claims history. And they say that they do not offer no claims bonuses because they do not think it is fair to those who do need to make a claim. But there are some pet insurance providers, such as Bought by Many and Pet Plan, that claim they will not increase your pet insurance premium due to a claim alone. Pet Plan actually says that it won't penalise you for claiming, and it wants to encourage you to claim if your pet needs treatment. But it does also say that you can expect your policy premium to increase at renewal, and this could be due to the fact that your pet is another year older. But they do say that they won't simply just hike your premium because you have made a claim. Another thing to look out for is understand the policy that you are taking out the first time around. Now, this is quite complex. I understand that it can be quite confusing when choosing a pet insurance policy, and I have written a lot of articles on the site explaining the differences between the policies. So lifetime is the most comprehensive and it is therefore the most expensive, but it does offer the most cover. So if you do need to make a claim, you can then claim again the following year, and your veterinary fee cover does renew annually. One thing you will need to consider is that a condition will be covered for the duration of your pet's life. But if you do need to claim, if you decide to switch providers because your insurance premium is now higher than you anticipated, with any other pet insurance provider, this condition you have claimed for will now be deemed as pre-existing, and it may not be covered with any other provider. Another thing to consider, as I said previously, about the policy excess, how much you're expected to pay when you make a claim. Some policies also expect you to pay a co-payment when your pet ages, which is a percentage contribution to the cost of the remaining bill minus the compulsory excess. And this is normally enforced on your policy when your dogs are over the age of 8 and your cats over the age of 10, but it can be lower if your pet is a pedigree. Another thing to consider is when you are making a claim, do check and read your policy documents carefully for any time limits on when you have to submit a claim. Some insurers may say that you have to contact them and make a claim within 3 months of you visiting the vet and identifying the condition. Some of them do allow up to 12 months for you to be able to claim. So do check your policy documents carefully. And one important thing to consider is if you do take your pet to the vets and decide not to make a claim because it's not worth it and you're not getting much back from your claim, with time limited pet insurance, which only insures your pet for a certain amount of time, you are obviously going to the vet and making a note of your pet having that condition. But if you don't claim within the 12-month period for that condition, you could run out of cover. So say you went to the vets in the January for a particular condition with your dog's leg, for example, but you didn't claim because the bill wasn't that high. But 12 months passed, and say in the 13th month of the following year, your dog now had a problem with that leg and you wanted to make a claim. Depending on your pet insurance provider, they may say that you have already run out of cover for that leg because the cover starts from when the condition was first identified. So that is something to look at really carefully in your policy documents so you know exactly what you are covered for, how long for, and when.
Great. So thanks, Lauren. That's really interesting stuff. So for those of you with pet insurance policies out there who are confused as to whether it's right to claim or not, just really understand the balancing point in terms of how much that claim is going to be, whether it's going to be an ongoing thing as well, and also the amount of excess that you have. So read your policy documents really carefully, do the research, go online, check the articles that Lauren has written because she's actually reviewed every major pet insurance provider out there. So it's very, very likely that the pet insurance policy that you have has been covered in detail by Lauren on the site. Okay, so travel insurance then. This is a fairly simple, quick piece, isn't it, Lauren? So when should you claim and what impact does it have?
Okay, so travel insurance, when you should claim depends on what you are claiming for. If you are claiming for an emergency, you fell ill when you were abroad, you need to contact your travel insurance provider as soon as possible. Most insurers ask that you contact them within 48 hours of the incident happening. But obviously, if you are unable to do so, then you need to contact them as soon as possible. Most insurers have a 24-hour claims line, which you can contact them on, and some of them also allow you to claim online. Now, if you are claiming for lost baggage, stolen baggage, then it is key to keep any documentation with you. And if you've had any of your personal items or belongings stolen, then some travel insurance providers do ask that you have a report from the police and you report the crime. They might ask for a crime reference number. So that's really important if you believe you have had something stolen. Also, when you are traveling abroad, carry your documents and certificate of insurance with you at all times because you never know when you may need them and you may need to quote your policy number. Also, if you are are having any problems at any local hospitals, then you can prove that you have travel insurance. Some travel insurers do ask, if it's not emergency treatment, that you call them prior to getting any treatment, because they may advise of particular hospitals that you can visit. And some also have clauses in their insurance policies about getting treatment at private hospitals. So that's definitely something to be bearing in mind, because you may not be covered if you accidentally receive treatment in a private hospital. If you are traveling in Europe, a lot of people assume that they may not necessarily need a travel insurance policy because of the old EHIC card, which is now a GHIC card. But some travel insurance providers insist that you have a GHIC card. If your old EHIC card has actually expired, then you do need to make sure that you've applied for the new global health insurance card. But if you do have an existing EHIC card, then this is usually valid until the expiry date. In most cases with a travel insurance premium, a claim is unlikely to affect future premiums. However, it is dependent on the insurer and whether you have had to declare if you've ever claimed on a travel insurance policy before. So that is something worth looking into if you have had to make a claim, or if you are renewing a travel insurance policy with the same provider. Another thing to consider with your travel insurance policy is it's really important that you always declare any pre-existing conditions you have, even if you think that they are minor, because if you don't declare something and you need to claim, and an insurer thinks that what you are claiming for is related to something you haven't declared, the insurer could potentially refuse to pay out. It's also worth considering that if you do have to make a claim for a particular condition and then you go to get another insurance policy at a later date, this condition may now be deemed as pre-existing, and a lot of insurers don't necessarily cover some pre-existing conditions. You may need to now speak to a specialist insurer to get that condition covered, or some travel insurance providers will exclude that condition altogether. So just to finish on your travel insurance, it's really important that you keep all of your policy documents with you, that you keep any receipts, any documentation, that if you do need to claim, you can provide all of that to the insurer. And another thing to consider as well is, depending on what you're claiming for, if you're claiming for cancellation of your trip, then you may need to see if you can claim elsewhere first. So for example, if your airline cancelled your trip, your travel insurance provider will ask you to go and contact your airline or your travel provider first before making a claim with them. And if you are unsuccessful with contacting those, then they are likely to look into the claim for you. So that is something to consider. So read your policy documents carefully so you know what exactly you are covered for before going to make a claim.
Okay, that's great, Lauren. I mean, there'll be lots of people that are thinking about travelling now. Things are opening up. So there's lots of food for thought there on policies and how you claim. So moving on to car insurance then, and obviously with car insurance, there's going to be lots of situations where there's no getting away from the fact that claims need to be submitted. And it obviously depends on whose fault it is in terms of liability. We're going to kind of park that to one side. We're not really talking about that in terms of claims. What we're talking about in terms of car insurance claims is those things where you need to get something fixed on your car. It's down to you to do it, and whether you claim through your insurance company or whether you go and get that done yourself, paying for it out of your own pocket. So there's been some research done from Compare the Market, and they've said that the average car insurance annual premium is roughly £660 when taking everything into consideration. Now, if you make a claim on that insurance, the average premium would go up to £844. Now, obviously, that's a significant amount, so it's something that you would need to consider. Now, the research highlighted that if you were to submit a claim and you were to blame for the incident, then you would typically face a higher premium hike the following year than if it was someone else's fault. That kind of stands to reason. But interestingly, if there is a situation where both parties admit liability and the insurance companies split the cost of the repairs, then you'll actually be looking at potentially a higher rise than if it was just your fault. So there are situations where it's not easy to ascertain what the premium rises might be if there were to be a claim. I suppose the obvious thing to say to listeners out there, now you'll know this already, is there is a thing called no claims discount when it comes to car insurance. People can pay to protect their no claims discount. So if you are at all worried about how much a claim might impact your premiums the following year, then it might be worth considering protecting those no claims so that you can be sure that there's going to be no nasty surprises the following year. And so finally, just of course, double check what your excess is and try and understand what the cost of any repairs would be. So if you've dinked your lovely, nice alloy wheels and you can get those fixed for £50 and your excess is £75, then that's obviously a no-brainer. Go and do that yourself and don't involve the insurance company. Okay, so let's move on to home insurance then. When should you claim? Well, if you're someone like Harvey, then of course it's a no-brainer. Unfortunately, Harvey had a house fire which resulted in a large financial loss, which obviously she needed to use and lean on her insurance company in order to fix and replace and everything else. So that is, of course, a no-brainer. And that's why you take out insurance. The things we're going to talk about here in terms of home insurance is the sort of balancing point between when you should and shouldn't claim. So again, we're going back to that whole balancing point. We need to look at how much the excess is. And of course, we don't know what the future premiums may be after you make a claim, but it's something you need to have in the back of your mind. So let's say, for example, you had something in your home that got damaged beyond repair. Let's say a kid's entertainment system, and it was a couple of £100. We know the excess, and let's say that's £100. So the difference there is £100. You've got to look at the fact that your future premiums are likely to increase even if you change insurance company, because you'll need to say that you've claimed on previous home insurance policies. And that doesn't just impact the premium for the next year, it may impact following years. So you've just got to take that into consideration. Personally, if it was a couple of £100 and I had an excess of 100, I'd think twice about claiming. But that's just me. Obviously, you need to work out what works best for you. If you've got something, say, over £1,000, that's where it starts to really impact your finances. And of course, that's why you take out insurance. There's a couple of tips here to just make people aware of. So in most cases, you won't be obliged to report every minor incident of loss or damage. So if you do actually have something that happens in your home and you sort it out and then you go to take out insurance the following year, you won't necessarily need to report that to your insurer. But that does vary from insurer to insurer. And an exception to this rule, and something to be aware of, is an incident that's affected the habitability or security of your property. And that's damage that could indirectly lead to a future claim or where a third party was involved. So obviously, that's quite technical jargon that they've used there. That's what insurance companies like to do, just to confuse people. So to break that down, what it actually means is anything that might have impacted the structural integrity of your home, perhaps the security of your home. Let's say there was a broken window or a broken lock. Even though you sorted it out yourself, you might still be asked about that and be obliged to mention that when it comes to looking at your renewal premiums, whether it's with your current insurer or a new insurer. And finally, I suppose the last tip is whether you intend to claim or have claimed or not, home insurance premiums are likely to rise year on year. So sticking with the same insurance company isn't necessarily the best idea. You should always shop around. And actually, even if you do shop around, you could go back to your existing insurer and tell them the premiums that you've been offered, and they may be able to lower their premiums and give you an offer. You'll be surprised what they can do when you get back in touch with them and tell them that you've got a cheaper quote elsewhere. Very frustrating stuff, but that's how insurance companies work. So there we have it. We've done a bit of a whistle stop. Well, actually not so whistle stop. It was quite a lengthy piece in the end, but we've gone through quite a few different types of insurances, whether it's worth claiming and what happens to your future premiums if you do. Okay, and so for the next part of the pod, we're going to be welcoming Bronte back to the show. Now, Bronte, as listeners may know who've listened to previous podcasts, has recently graduated with a first. So she is best placed to give these next tips. What are we going to cover on the next part of the pod and why?
So we're going to be looking at the top 10 money-saving tips for students. So obviously not everyone who listens to the show will be a university student, but we probably all know one or know someone who is about to be one. So we're just going to walk through our top tips for managing your money and staying out of student debt.
Great. So we've got 10 tips to fire through here. We've already taken a fair chunk of today's pod going through the insurance piece earlier. So we'll make this quite snappy. So what's tip number 1 then?
Okay, tip number 1, this is absolutely crucial. You need to work out your budget. Now, it can be difficult to estimate how much money a student's going to have before they even start university, but the better the outline that you can get of your typical expenses, the better you're going to be able to manage your money. So we have an article about this on the website that details how to build your own budget from scratch for beginners, but essentially you need to put all your monthly income together. So this is all the money going into your bank account on a regular basis, such as your student maintenance loan, your work, or even money you get from your parents. and you add that all up to find out how much money you've got in total every single month. And then from there, you just need to start listing off all your typical bills and expenses. So this can be anything from rent for your accommodation to your usual travel costs to even something like your phone bill. And you take these away from your total income for the month. And then by the end of that, you should have a rough idea of how much money you've got left to spend on yourself, whether that be for going out with friends, shopping for new clothes, or even buying decorations for your dorm room. So tip number 2, not everyone necessarily thinks of this, but you should consider applying for a bursary. Now, not everyone will be eligible for these, as typically they have quite strict eligibility criteria, but there's no harm in trying, applying, finding out if you might be able to get a few hundred or even a few extra £1,000 each year, which can make a huge difference to a student's financial situation and can help them cover the costs of necessities such as groceries or travel. Now, the process for applying for a bursary or any kind of similar financial aid differs from university to university, but generally speaking, a student will contact their advisor or their student support service, and from there they'd be pointed in the right direction. So even if you're not struggling financially, it might still be worth checking your eligibility anyway, because not only are there bursaries, but most universities have scholarships or award schemes that are available to students, and these might be able to give you access to a little bit more cash that you might find that you do actually need at a later date.
I like that one. If you don't ask, you don't get. So
essentially, yeah.
Absolutely. Brilliant. Tip number 3 then.
So getting the right bank account for you is absolutely crucial. So most students will probably end up sticking with the same bank that their parents had, or even a junior bank account that they had before. But the terms and perks can vary widely between different companies and different banks, and you could end up on a much better deal if you actually shop around. So, for example, the amount of overdraft that you could get and how much interest you would have to pay on it can be completely different depending on the account that you've got. Some popular high street banks have up to £2,000 interest-free overdrafts, but some have this caveat that students can only access £500 during the first academic term, which you'll find is probably when most students will actually need that money, because that's the time of year when all the expensive events and nights out and parties are being held. So that's something to pay attention to. And that's why you need to do your research. So luckily on the website, we've got a list of the best student bank accounts in the UK with all the up-to-date rates and perks. And one last tip is to try not to get swept up in all the offers and discounts, because a lot of student bank accounts have things like money off on Uber Eats or Deliveroo or whatever. But what's really important and the crux of your account as a student is the overdraft capacity.
And actually, talking of overdraft, I can see tip number 4 right in front of me here. So number 4 is specifically about the overdraft, right?
Yeah, so essentially don't abuse it. Speaking from experience, it can be quite tempting to just tap away, especially if you're on a night out, you're surrounded by friends, and contactless payments are kind of the go-to now. So it can be very tempting to just tap, 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 and you end up in your overdraft. And this can be quite a vicious cycle, because once you're in your overdraft and you've got no income coming in, it's really hard to get back on track and pay it off.
And that's a really good tip going forward, because when you apply for other sort of financial products, banks don't really like people that live constantly in their overdraft, because you become too reliant on them, and it sets a precedent for later in life. It took me a long time to realise that personally, Bronte. So
yeah, and we do have an article on the website about how to clear overdraft. So if you've got any questions or queries about that, do head over there. Okay, so tip number 5. This one's fairly obvious, and we've probably all heard it before, but it is really important to consider getting either a part-time or a freelance job to support yourself while in full-time education. So this doesn't even need to be something that takes up a lot of time. It could be anything from helping to tutor kids for a couple of hours a week to even expanding on your own freelance work as a writer or an artist, if that's the sort of thing you're interested in. And also, most student unions offer a wide range of roles on campus, which can be helpful if you're already living there. But as well, there's also the usual job searching websites like Indeed, Total Jobs, Reed, which are great places to look as well for off-campus roles.
a quick tip on getting a part-time job while you're at uni is perhaps look for somewhere that offer other things over and above the money that you're earning. For instance, I had a friend that worked in a kitchen, and part of the deal was he got fed when he was there. So he would turn up early for work, get fed. He would then do his shift and get fed at the end of the shift. And he ended up not spending any money on food.
Exactly, because you're saving money on food. That's great.
Absolutely. So if you can double down on that.
Yeah. So tip number 6, this is really important for UK students, especially those who are moving away from home to go to university, and that's to get a 16 to 25 rail card. So these are provided by National Rail, and they're for people between the ages of 16 to 25, and also for mature students. So if you're in full-time education, regardless of your age. And essentially, these give you up to a third off of the price of any National Rail journey, regardless of where it is in the country, what time of day, whatever season. So You could save an average of up to £189 per year. And you can apply for one all the way up to your 24th birthday. So even people who've recently graduated can make use of those discounts. And in addition, you can also get loads of deals and rewards from a range of retailers. At the moment, there's a free subscription to the Mindfulness app, and there's 50% off selected theatre tickets as well.
And to get one of those 16 to 25 rail cards, you need to pay a little bit up front. I think it's £30, isn't it, for the year? Or you can do it for 3 years, and that will cost £70.
Oh, and actually, Andy, here's a good tip. If you have a Santander student bank account, you're eligible for a free 16 to 25 rail card, so you won't have to pay any money up front while still getting that 1/3 off national rail train tickets.
Great. And so I touched on eating earlier. My friend that decided to take up work in a kitchen so he could eat all the stock. The next tip is about eating, isn't it?
Yeah, so tip number 7 is learn to cook. We've probably all heard it from our parents or family members before, but this could actually save you a lot of money. And if you're anything like me, when I was at university, I was living off of toasties and sandwiches at the campus cafe, but they're really, really expensive and that money does add up. So for example, if you're paying £3.50 London prices for a sandwich on campus, you could probably recreate that in your kitchen for less than 50p. And in fact, a report in 2020 by a personal finance firm called SoFi found that most restaurants and cafes charge a 300% markup on the ingredients they serve. And so it's often on average 5 times more expensive to order takeaway food than it is to cook at home. So obviously the takeaway there, pun intended, is make your own food at home, save money, prepare dishes in advance. So things like soups, stews, or casseroles can be portioned up, frozen to eat later, or make your own sandwiches or salads as a packed lunch to take to class. And you'll find yourself saving a ton of money.
And don't forget that supermarkets have an amazing aisle. It's called the pasta aisle. And,
Yeah.
They do super noodles and everything. You can pick them up for about 50p a packet.
Yeah, and so for recipe ideas as well, the Student Food Project has a website which offers a wide range of meal inspiration on a student budget, and the magazine called Delicious actually has a list of 64 easy student recipes, even for people like me who are absolutely terrified of the kitchen. So I recommend those.
Okay, moving on to tip 8, and we're talking about sort of studies now and how to cut down the cost of buying the materials.
Yeah, so tip number 8 is to buy secondhand books. So university degrees come hand in hand with expensive textbooks, and sometimes, and in some cases even usually, students are expected to purchase or rent these out of their own money. Now, those of you who have been students or already are students will know that these books can be really costly, sometimes upwards of £100 or more. So it's really useful if you can find a way to access that content without paying through the roof. So the first place to go is to try and find secondhand books on websites such as eBay or Facebook Marketplace, or there are other websites which digitize copies of textbooks for students around the world so that you don't have to pay for the physical copy. So one example of this is a website called StudyLib. So that's STUDYLIB. And it's one of the best places on the internet to easily find textbooks or research papers or journals, which are often behind quite a hefty paywall. But apart from that, keep an eye out on social media, because quite often graduating students will advertise their used textbooks at a large discount or even for free because they're leaving anyway. So you could get yourself a whole set of books that would have otherwise cost you hundreds of pounds. And so tip number 9 is to shop in the evening. Now, this is often quite overlooked, but if you do your grocery shopping in the evening, you could save yourself a lot of money because most supermarkets start to reduce the prices on items that they need to sell by the end of the day. So this could be anything from staple foods like bread or rice or fruit, but also for sweet treats like donuts or pastries that need to be sold by the end of the day. Although I would warn you, do try to avoid shopping on an empty stomach because you're far more likely to spend a lot more money.
And that's a perfect tip, and it's exactly why, Bronte, I started to do my food shopping online, because too often I found myself walking down the aisles picking up the stuff I don't need just because I'm absolutely starving. So good tip, that one. And the final tip then.
Yeah, so number 10, make use of student discounts. Now, this is something I wish someone had told me to do more when I was a student. Do not forget your student ID. Take it with you anywhere and everywhere that you go, because most places, if not all places these days, will have a discount for students. And this can be up to 20% or even 25% at places up and down the country. So that can be anything from bars and restaurants to even high street shops, or even if you're, buying a plane ticket. So do make sure to remember to bring that with you as often as you can, and make use of other discount schemes designed especially for students. So a really popular one of these is Uni Days, which can give you access to loads of deals and offers, especially especially for students at a range of retailers. So some of these are ASOS, IKEA, Amazon, Samsung, and Google. So do take a look at that.
Great stuff. So there we have it. Thanks, Bronte. So 10 amazing quick tips on how you can save money if you're a student. And so for the final piece of the pod, we're going to welcome Laura back to the show, who's going to be talking about the energy crisis, what's been going on, who's been affected, and really, for those who have been affected, what they need to do next. So Laura, welcome back to the show. What's going on with this energy thing then?
So it's been a busy week in terms of energy companies. We've seen the broader trend of wholesale energy prices going through the roof, and the government came out earlier this week to say that they were keeping the agreed price cap for this year. But there has been a fallout from this crisis in that a further 6 energy firms have folded in the last month. So last week we saw Utility Point and People's Energy joining PFP Energy and Money Plus Energy in going into bankruptcy. And then this week we've had both Green and Avro Energy also folding. So that's going to leave people understandably concerned about what to do if they were a customer of one of those companies, and also what it means if they have built up credit in their account, if they've been saving money over the summer because they haven't been using as much energy, and whether that built up excess is now at risk, and are they going to get that money back?
Yeah, it's a really strange time at the moment for energy companies, as you say, and there will be a lot of people who are a bit confused as to what's going on. So we're going to touch on that in a bit more detail in just a second. But just going back to what happened and the fallout, and as you say, 6 companies have folded, and who knows what's to come. One of the people who works in this office was actually a customer of Green, and Green sent out a statement to all of its customers to kind of give a bit more context to what went on, because all that you really see that's reported in the press is with regard to Ofgem and the price caps, and also the fact that the government seemingly not sort of stepping in to help out. And I've got that statement in front of me, and I think some of this is quite interesting because it does give a little bit more context, as I say. So Green went on to say that while much has been written in recent days about hedging positions, there is little discussion on the impact that the government lockdowns had on the crisis, and it changed customers' usage patterns dramatically, which led to greater domestic use than anticipated. So there's obviously lots of other things impacting this. And in fact, Green was forced to purchase additional energy at the prevailing market rate. And this was all at a time when these companies were being forced to relax credit control, which led to a greater increase in the amount of debt being built up. And obviously, Green was unable to collect these monies at a time when they were purchasing energy at ridiculously high rates. When you consider the fact that these smaller companies were effectively selling energy, selling their gas and electricity at a loss, there was no wonder that something had to break in the end. So, Laura, there'll be many of our listeners, no doubt, that have been impacted by this. So what is the advice? What should they do?
So firstly, it's important to stress that Ofgem, the regulator for this sector, have given assurances that people aren't going to have their power supply cut off. That's going to continue, that they shouldn't rush to change suppliers. This will be something that will happen in due course. And also, any money that has built up in their account will be refunded to them. That money is protected. So that should give people some peace of mind. I think, interestingly, looking forward, the potential impact that this crisis may have is it really puts pressure on those energy switching services that have gained such popularity over recent years, where people will quite regularly look for a more competitive deal, to look to save money on their energy costs. And it's unclear whether there's really going to be space in the market for that moving forward, where people will perhaps look for the safety and security of going with one of the big 6 energy providers rather than some of these smaller providers, which it has been shown in recent weeks just aren't as robust. So that's not exactly great news for consumers, that it looks likely we're going to have fewer providers, and there isn't going to be the same scope for being able to seek out a better deal and for competition in the market to keep prices low.
So effectively, the message there is to sit tight for those that are affected. It's obviously not a great time. Christmas is coming up. I'm sure there are many people who have built up hundreds of pounds. That money is protected. It may just take a little bit of time to sort through. And again, as Laura said, you will be provided with a new supplier. But I think we all need to be prepared that energy prices going forward, certainly in the short to medium term, are going to be a lot higher. And if anything, Laura, I tell you what, this has made me want to get my wind turbine sorted out in my garden because I cannot deal with these increases that are coming up. Thanks ever so much for coming on the show, Laura. That's it. We're done. That's it for this week. I miss Damien, but he will be back next week. So if you want to get in touch with him, you can do so. It's damien@moneytothemasses.com. You can contact me if you like. It's andy@moneytothemasses.com. Review the podcast if you can. And so all that's left to say is until next time.